Good morning, everyone. Happy Wednesday. It is International Women's Day, March 8th. So, to all the women out there, happy March 8th. It's a very big holiday here in Bulgaria and I think in a lot of Europe. So, it's like, I don't even know what to compare it to, but it's big. Like tonight, there's going to be a lot of activity in the downtown core for sure. So I hope everyone has a great holiday. All the women out there, everyone appreciates you, and it's a well deserved holiday, I should say. So let me just get back into this market right now. It's Wednesday today, and yesterday we had Jerome Powell that came on. He talked in front of Capitol Hill. He talked about the monetary policy report, and as expected, remember yesterday what we talked about. I was telling you guys that I could foresee a possible hawkish narrative from Jerome Powell because of the recent economic data that had come out, right? The recent economic data was strong and it really opened up the potential for a more hawkish Jerome Powell and a more hawkish Fed looking to further hike rates because, again, inflation is going to be the majority of the Fed's decision-making process this year until it is subdued into the Fed rate, right? Into the quote-unquote Fed rate. One of the most interesting things is that yesterday, by the close of the session, the percent probability, remember I was talking about this before, the percent probability of a 50 basis point hike in March was about 30%. Right now, currently into yesterday's closing right now, 75% is the percent probability chance that not next week, but the week after we see a 50 basis point hike, which is moving back into the more hawkish territory to get these rates well above 5% into the end of the year. Because we have March, May, June, July, September, November, and December. 7 more meetings. Now, these 7 meetings, I don't think that every meeting is going to have a hike, but there are 7 more meetings to end the year. We're still at the beginning of the year. 7 more meetings to end the year, which can present, even if there's 25 basis point hikes in half of those 6, excluding March, right? Even if half of those, so 3 of them, 75 bips, that puts us pretty much almost at the 6% terminal rate, which is something very, very hawkish. So if inflation isn't getting subdued into the first half of the year and the 2% target is well out of reach, then you're going to see very elevated rates for a very long time without the Fed reversing this and looking for a more dovish narrative. And he also mentioned that the quantitative tightening cycle and unwinding the balance sheet is going to continue a little more aggressively down the line. So today, he's back in the hot seat, delivering his second day of the semi-annual monetary policy testimony before the House Financial Services Committee. And the markets, they've already jolted from the prior session. Jerome Powell, his hawkish tone, dumped the market about 2.5%. The key 2-year yields and the 10-year yields, the Treasury yield curve, hit its deepest inversion since 1981. And I think the 2 and 30-year hit a very deep inversion as well. So the 2-year, it's up. It's almost at like 5%. Ooh, let me not lie to you. Let me see USO2Y. If you're looking on TradingView, you can see the 2-year yields. If it loads for me, okay. USO2Y, where we hit 5% yesterday into the close on the 2-year, a very strong close. And as these yields continue to go up, right, short-term yields, even long-term yields are continuously going up, you're going to see some downside pressure in the bond market, which is going to put some downside pressure in the overall equity market. So it's something very, very interesting to consider. The continuous rise of these yield curves is going to put upside pressure on interest rates as well to continue rising. So you're going to see more potential downside in the equity market. So is the low end? Who knows? Is a soft landing? And probably not realistically after these recent transgressions. So from the transcript, the process of getting inflation back to 2% has a long way to go, and it looks to be bumpy. This is what Powell told the Senate Banking Committee. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. So if the totality of the data were to indicate the faster tightening is warranted, we would be prepared to increase the pace of rate hikes. And then boom, down goes the market from that area. So the speech shows just how data dependent the Fed is into oncoming data. Remember, we have CPI next week. And this is all leading up into the March 21 to 22 Fed rate hike decision announcement. So over the next 2 weeks, investors are going to look at non-farm CPI in terms of anticipating these data points. We have JOLTS, we have a bunch of other stuff in anticipating how these data points are going to affect the Federal Reserve's next move, because you can't really fight the Fed realistically. So with that, I'm still looking for more downside and downside pressure in the markets, because the Fed is going to remain very hawkish realistically. And I think this time around, those last 2 days on Friday and Thursday look like a blip. I think we do pull down back below the actual lows that it pressed last week. And I'm not sure how much further down it gets than that, but I think there's going to be some dip buying opportunities where you can see that potential longer term investment play out. So I think there's still a little more downside to come. I think we're going to continuously sell rallies until we break those lows that were printed last week. In some of the other news, right, Warren Buffett downs more Oxy. Berkshire Hathaway has resumed purchases of Oxy, Occidental Petroleum, raising its stake in the oil company to about 22%. According to the SEC filing, that means that Warren Buffett-led conglomerate now owns 200.2 million Occidental Petroleum shares, worth about $12.2 billion based on Tuesday's 60.85 closing price. So as well as $10 billion worth in preferred stock and related warrants. And the holdings would generate around 144 million on an annual dividend front, following Oxy's increased payout announcement last month. So it's one of the top 10 holdings that he does hold. And I remember yesterday we were talking about Meta in the group, and TikTok as well. And there's some news based on that. Senate Intelligence Committee Chairman Mark Warner, DVA, has introduced bipartisan legislation aimed at policing the threat of technology from advertisal nations, a move lately pointed at a potential ban in Chinese-based TikTok, so BDNCE. The Restrict Act would allow the U.S. Commerce Secretary to determine if a transaction poses undue and unacceptable risk to national security, and could be sent to the president for action, including forced divestment. It's safe to assume that if the CCP is willing to lie about its spy balloon to cover up the origins of the worst pandemic in 100 years, they'll lie about using TikTok to spy on American citizens. This is what John Thune, I don't know, a Republican senator disclosed. So this would affect social media players in the States like Snapchat and Instagram, right? Meta. So, and also Google, where you have those shorts. So they saw a little pop yesterday, obviously with the expected downside from hawkish Powell. We didn't close very well in those names, but in terms of overall market movement, right, and the ideas for the day. Of course, I do want to mention that we're still community.tradeproacademy.com. If you want to check us out, we're still running that live voice on Discord. So today's going to be day 3. Yesterday was amazing. We had a lot of great trades, and I hope to see you guys there. We're going to talk about plan at 9:15. But also yesterday we did launch internally, right? This is the first time I'm going to mention this until we externally launch it. We internally launched the futures course that is based on order flow and the DOM and the volume profile. Throughout this course, you're gonna learn about the DOM and order flow like you've never seen before. So just stay tuned. We're gonna send out a lot of emails, and it's gonna be all over our social media in the coming weeks about the official launch of this futures course. But until then, come join me at community.tradeproacademy.com, where until the remainder of the week, I'm gonna be trading live with you guys there. In terms of the plan, there's a key area that we're kind of pivoting around right now, 3988 to 90. This is a region that starts the distribution block to the downside. So if we manage to accept and hold below that, I'm going to be looking for some of that downside sell pressure that moves us into the 39.74s. I'm honestly leaning bearish. I'm going to be looking to sell most rallies. Another rally is between about 97 to about 4,000. I understand it's 3 points, but into that region, I'm going to be looking for some sellers to show up. I'm just going to be looking to sell most rallies today. If we manage to close back above the 4023 somehow, then downside's probably going to be over, but I don't think that's going to be the case. I think there's going to be a lot of sellers that do try around 4,005 as well. So keep those areas in mind as we jump into this live for the third day in a row in Discord. So thank you all. Happy Wednesday. Again, happy March 8th. Happy International Women's Day. I hope everyone has an amazing trading day, and let's get ready for what's to come. Jerome Powell coming up again today, and then Friday pre-market, we do have the non-farms. So I'll see you guys tomorrow. Thank you guys and take care.